All right, Dan Feynman is joining us now. He's co-head of equity strategy, Asia Pacific at Credit Suisse. Dan, great to have you with us here on the program. Thank you very much. The last time we spoke, I remember you were cautious. You were cautious about the outlook for equity markets globally, the US in particular. Has that view changed? Are things looking a little better now? Because we have had a few inflation prints, which is suggesting that that problem may be sort of closer to the end rather than the beginning. What's your sense?
We've kept our cautious stance on the U.S. and most global markets. Although we had a good inflation print, we have to recall that we had a couple of good prints over the summer last year, and they turned out to be one-offs. I think that for inflation in the U.S., the real difficulty comes as you get closer to the Fed's target range. It's much easier to bring inflation down from 8% to 4% than from 4% to 2%. And that's where we think that markets will get tripped up later in the year. That's when we'll see that inflation proves stickier on the downside, that the Fed needs to keep rates higher for longer than the markets are anticipating.
Okay, Dan, hi, good morning. We have a big event upon us, which is the union budget. I think it's the biggest day in the financial markets, right, in the year. So the expectation this time around from an Indian investor is that the fiscal consolidation will continue, and also the government will prioritize manufacturing and investment via capex spending. From an onlooker's standpoint, is there anything in the budget that you would expect that could perhaps move the needle of the market?
You always get a short-term reaction in India to the budget, but I think from a longer term point of view, anything from 3 months onwards, it isn't a major issue apart from, say, the question of broader fiscal stance of the government. But I don't think that the minutia of the government budget has a lasting impact.
Hi, Dan. Morning. What about that toss-up between India and China? I think you were leaning towards China the last time we chatted because of the valuations. It's done pretty well, actually. The last few months have been very good for the Chinese equity markets, while India, we've taken a bit of a backseat. What's the toss-up between the two now?
China still seems to enjoy the edge, largely on valuations. India obviously has a much better structural growth outlook, and I wouldn't describe India's cyclical positioning as negative. But China is coming out of a very deep trough cyclically, and the valuation differential is still huge. India is still extremely expensive, even by India's own standards, and it is historically, it's been an expensive market. China is still more cheap than it's been historically, and that means that the valuations are still too big to ignore.
Dan, if US will slow down, right? I mean, if there is no, but there's no large, painful slowdown as such. I don't know if you're expecting that. The latter is an outcome. And if China is opening up and it kind of gets into more routine kind of a state and not like locked down and, slower growth as compared to before, but I mean, out there, is it so bad? Is it going to be so bad for global markets, in your opinion? Isn't that a more steady state kind of an environment to operate in?
The story is really about earnings. The U.S. economy will slow significantly. It's not going to fall off a cliff. And more importantly, the street has yet to adjust to the reality of significantly lower earnings for the S&P 500. We think that this year is about earnings. Last year was about rate hikes. This year, it's about earnings cuts.
Okay, all right. It's about earnings cuts. We got that. So finally, you want to give us your preference at Credit Suisse. Where does India feature in the emerging market basket? What would your pecking order look like for the rest of the year?
Roughly in the middle. If you're looking at large markets in Asia, China would be the first place we would be investing in on a 3 to 6 month view. Then India next. We like its structural prospects, but the valuations keep us from being more enthusiastic. For the moment, we would rank at the bottom the export-oriented, tech-dominated markets, Taiwan and Korea. where we think that the going is going to remain rough for at least several months more.
All right, we will leave it at that. Thanks a lot for joining in and giving us your view. That's Credit Suisse. Let's slip into a quick break. Lots of stocks to talk about on the other side, lots of big issues as well. Stay tuned. We'll be back in a bit.